Bitcoin rebounds like a boss. Are there any short-term opportunities for profits? I will rather short, actually. Buckle up, because we're diving deep into the weekly chart vibes, spilling the tea on key levels that'll blow your mind, and dropping Shinshin's fire trading strats. In this video, we're talking technical analysis and dig deep. Don't sleep on this, let's get this crypto bread. Opening Bitcoin's chart, let's first look at the weekly. This week, after this rebound, if it continues like this, we might see a hammer candle with a long lower wick. If so, that's not bad. It's a bottom formation signal. If next week the rebound continues strongly, closing with a bullish candle, it becomes a very beautiful bottom reversal signal. It might break through our previous consolidation platform and move towards new highs. Of course, one candle doesn't make a trend. It might take several consecutive bullish candles to engulf the previous downtrend. But now, we're not sure yet. We still need to watch this week's closing situation anyway. Looking at this drop, it hasn't broken the uptrend from the end of 2022. If we draw a Fibonacci from the start of the ETF expectation hype in September 2023, the depth of this correction is quite appropriate, as 0.5 retracement is healthy. Why do we say it's healthy? Actually, Bitcoin has a pattern that's been quite reliable. Let's open the Fibonacci extension. See, this downward move to the bottom, then rebound and fall again. The target is a 1.1 ratio of the previous drop. It's an A-B shot CD pattern. Looking at this wave, it's the same, down to the bottom, rebound to the high, then down again. It's a 1.1 pattern that's been Bitcoin's recent rhythm. Now, on the weekly, we've retraced to here. Whether it consolidates at this low level, or consolidates at a higher level after this low-level consolidation. If we define this position as a phase bottom, looking at it, our 1.1 target, the next new high, could be 86,000. That's the 1.1 position at 86,000. Of course, this is assuming we don't make new lows. If we make new lows, then all bets are off. Will it be a phase high? Will it make new lows? The core issue is to open our 4-stage indicator and look at the breakthrough of the 60,000 integer level. If 60,000 doesn't break, our indicators, as we discussed in the last video, are all in bearish alignment. Whether it's KDJ, RSI, or our MACD with expanding red momentum bars and 2 lines in bearish alignment, etc. These indicators all tell us to expect continued downside after the rebound. In other words, as long as the weekly doesn't stabilize above 60,000, there's a possibility of continued decline to new lows. That's our previously mentioned next spot buying position at 42,000, 43,000. So this 60,000 integer position is significant for our medium to long-term reference, defining it as a short-term bull-bear watershed. For our short-term guidance, this short-term position is a strong resistance and can be a key take-profit level for our medium short-term oscillation trades. For example, if we enter a long position below, we might take profit here. Okay, let's move to the daily chart to discuss medium short-term matters. Looking at the daily, we can see it's still oscillating in this descending wedge. Actually, a descending wedge is a bullish pattern. The previous plunge saw huge daily trading volume, much larger than many previous days. There's a saying in trading called sky high volume sees sky high price, earth low volume sees earth low price. What does this mean? It means volume supported rises, huge volume at highs marks phase highs, and huge volume at lows during drops marks phase lows. So from this perspective, this position is our phase low, 49,000. After the downward break, it quickly recovered and rebounded. As it rebounds upward, we mentioned earlier that this descending wedge is actually a bullish pattern. The prerequisite for it to be bullish is that it breaks through the upper trend line of the descending wedge, forms new highs after the breakout. That's the bullish property of a descending wedge. Currently, it's fallen to a very low position. If it can recover above the middle line during this rebound process, standing above the middle line and moving up can still form new highs. So it depends on the strength and path of the rebound. Currently, our indicators also support a rebound. Okay, let's look at the 4-hour chart to see the rebound strength and continuity. First, look at the downtrend line. The current rebound strength is still some distance from our downtrend line. Looking at volume, the strength isn't very large because there isn't much volume below, so the difficulty of rebounding upwards is relatively small. The difficult part is here, this green box where trading is dense and volume expands. So it might encounter its first hurdle next. Also, Opening the Fibonacci, we can see that this rebound has just recovered to the 0.382 position. If it can stabilize above this 0.382 at 56 as 900, it will reach the resistance of our descending channel above, which is also our most important bull-bear dividing point at the 60,000 integer level, also the Fibonacci golden pocket, the bull-bear transition point. So next, it faces two major resistances here and here. It might face resistance here and gather strength downwards, then move up and possibly face resistance here again. Gather strength downwards before moving up. Anyway, there's heavy resistance above. Is there support below? In other words, where might it go if it faces resistance and moves down? Opening our beautiful pressure band indicator, we can see the support band below in our green box at the 54,000 position. Let's draw it out. So this is our retracement target. Our strategy today is very clear. If it pulls back, we go long. This is our first target. And this is our second target. We'll take profits in batches at these two positions. Okay. Since it's oscillating, we can also open short positions. There are two resistance levels for opening shorts. One at 57,000 and another at this higher resistance. Comparatively, I prefer to open shorts here. I'll enter a short position when it first reaches this resistance level. My first take profit level would be at 57,000. The second take profit level would be our ultimate target at 54,000, okay? That's our short-term situation. Also, some experienced traders among you might have noticed that recently, on the 1-hour chart, it's been quiet, because if we open the 1-hour time frame, it's actually making a very rhythmic step-by-step upward movement. If you use trailing stop loss, well, it's actually quite good to trade. Alright, that's all for today's video. For more trading signal and fundamentals, join our TG group and receive time-sensitive trading info.